Are you investing with discipline or with fear and greed? This is Bill Scheid from Applied Finance Research, and in this video, we're going to explore the behavioral clues that reveal what's really driving your decision. So first of all, let's jump into why this matters. Fear and greed are natural human emotions, but unmanaged emotions ruin systems and wreck investment accounts. Discipline, of course, is very important in the world of investing, but discipline doesn't mean not having emotions. It means having emotions but following your rules anyway. So what are some of the behavioral signs of fear-based trading? One is abandoning your system when the market feels scary. So maybe that's during a time of high volatility or a time of a significant market pullback. You start to feel fear, and so you don't follow your system rules. Other signs are cutting winners short due to fear of giving back gains, hesitating or not taking valid entries, getting in late due to the fear of missing out, and revenge trading to make it back after a loss. Now let's also take a look at the consequences of fear-based trading. Missed gains while the system works without you. So for example, you choose to not take an entry and it turns out that that entry was a profitable one. Now the system is working while you are sitting on the sidelines. Reduced edge due to poor risk-reward outcomes. So your emotions are leading you to make unhelpful decisions, and that is reducing your risk to reward edge. Emotional exhaustion is another one. Loss of confidence, break of trust in your system, and perhaps the worst is break of trust in yourself. Now, let's take a look at what are some of the behavioral signs of greed-based trading. Increasing position size or leverage after a winning streak, ignoring exit rules and holding too long, overtrading setups and entries that are outside your system, feeling invincible, and generally throwing your risk management out the window. Now, what are the consequences of greed-based trading? Well, big wins turn into losses. You suffer catastrophic drawdowns from oversized positions. Your system stats become meaningless because they don't reflect the rule set. This is important. You can't track your progress or the progress of your system if your entries, your exits, your position sizing don't reflect the rule set of your system. Then your stats aren't pointing to the results of your system, they're pointing to the results of your emotional reactions. So it becomes very difficult to track your results. Now, let's take a look at what mastery looks like. This is very, very important. Mastery looks like having your emotions and following your rules anyway. That means sticking with your system in good times and in bad times. And I will say that it's much easier to stick with your system if you have an expectation of what its long-term expectancy should be, and B, you have a set of rules that tell you exactly when your system performance has deviated from the statistical norm, and then C, you have a set of rules that tells you what to do when you find that your system is no longer working, that it is outside of what you would expect statistically speaking from the long-term performance. Third, it's about accepting that losses are part of the game, and it's trusting your long-term edges over your short-term emotions. And finally, it means having a disciplined process that guides your investing, that guides your trading, that gives you a way to bypass your emotions or mitigate the effect of your emotions on your decision-making process. So here's a few questions that you can use for self-diagnosis if you're not sure if you're investing and trading with discipline or with fear and greed. So you can ask yourself, am I sticking to my system even when it feels uncomfortable? Do my entries, exits, and position sizing reflect the discipline of my rule set? Or when you look back at the entries that you've taken or the exits and your position sizing, Do they not reflect the discipline of your rule set? Are they more influenced by your emotional reaction in the moment? And you can ask yourself, do I feel undue urgency or pressure to act? A lot of times that urgency, that pressure to act, that's driven by an emotional undercurrent of fear or greed. And you can ask yourself, am I reacting to recent results like losses or gains, or am I following a long-term plan? As Dr. Van Tharp would say, if you want to achieve the long-term expectancy of your system, then you have to follow the rules. Now, let's wrap up with a few final thoughts. So one of the big takeaways from all this is that fear and greed never go away. You will always have emotions, but the question is, do you have your emotions, or do your emotions have you? Discipline and practice are what give us the strength to act in spite of our emotions. Discipline is a muscle. We develop it with practice, with training over time. The more we do it, the better we get at it. Just like any other skill, just like any other practice in life. And finally, I'll leave you with a quote from Dr. Ken Long. Mastery is not the absence of these emotions, but the presence of a disciplined process that renders them irrelevant to your execution. This is Bill Scheid from Applied Finance Research. Thank you very much for watching, and happy investing.